when I talk about marketing metrics, you're going to hear me sometimes say KPIs, metrics, numbers, kind of all in the same, okay? But when I say the word KPIs, these are marketing key performance indicators. I'm sure you've heard of them. You might not know the actual definition of it, but a KPI is absolutely necessary in every single department in your real estate investment business and business. Like, you can't be an entrepreneur without understanding KPIs, which are key performance indicator numbers, okay? So these KPIs basically refer to measurable values that highlight the effectiveness of any given campaign across your marketing channels, okay? In this instance, that's what we're talking about, okay? So why are metrics important? Why are your KPIs important? Why is it important to test and track the effectiveness of your campaigns? Because number one, you need to track your effort, and your results. That's the bottom line. If I were to ask you how many leads came from your direct mail campaign in November, could you be able to tell me that? As a manager, chief, head of marketing, you should know right away. That's how important the numbers are in your business at that level as well. So marketing metrics are a great way to keep track of all your marketing efforts and the results. If you can't measure something, you truly can't understand it. So let's just say if you are getting your probates out the door, right? And you're getting a response rate, right? And you're like, oh, it's under 1%, because this happens to me all the time, okay? Oh, I'm not getting as many leads. I'm right under 1%. So that's not a good campaign. However, so you look at your how many leads you're generating, how many, leads came from that campaign. But then when you look at your other KPIs, let's just say your conversion rate, you could say, hey, my response rate might be right under 1%, but I'm converting 20% of these leads that are coming in versus my absentees that I'm getting a 3% response rate, but I'm converting 8%. Do you see why the numbers are so important? You wouldn't be able to understand how important your probate campaign is, because even though the response rate might not be as high, your conversion rate, that means they're very motivated to sell. So your conversion rate is really going to tell you just how, good these deals are and motivated. So that's why it's important to measure these numbers, because that's how you truly understand. And if you don't understand, how will you truly control your campaign and improve it? And if you don't understand or measure your campaigns, you have to think of the money aspect. You didn't come into this business to waste money. When you measure and track and keep track of all of your numbers, you'll be able to say, hey, this tax list is, I'm getting a 0.7% response rate, a 0.9% conversion rate. I'm spending $2,000 a year on it. I'd rather take that $2,000 and put more of my efforts into this, these other two X and X campaign versus still putting it in this other campaign. So, this is where you kind of transition to manager and make good business decisions when you track, measure, and understand what's happening so you can make good business decisions, okay? Because what are you really trying to do? Make a profit here, right? If you're, throwing money out the window on the front end, you're not truly, going to make as much on the back end, if you're not truly understanding what's happening with your lead generation. The metrics will allow you to grow faster. That example I just gave you, instead of just, getting your campaigns out the door and saying, oh, that works, that doesn't work, without actually looking at your numbers. If you're like, hey, I'm going to take this money and put it somewhere where I'm going to grow faster because I'm getting a way higher response rate and a way higher conversion rate, that will allow you to grow faster because you're making decisions that will allow you to grow faster. Again, just what I said, it increases your ROI, your return on investment. When you're making good, smart business decisions on the front end, that's truly where your profit lies. I said this since day one. Your profit is a reflection of what has happened in your marketing department, you know, what the investment you have made in your marketing department. All right. Don't waste money. I just reflected on that as well. You know, metrics are important, so you don't waste money. You know, you didn't get in this business to throw money away. You came in this business to make money. And that's why the metrics are so important. And you can actually focus on quality money-making campaigns. All of these decisions come down to one thing: what's working, what's not working for your business. And here's the thing. The reason you can't say right now, oh, this one thing is working for every investor in the country, is because simply there is not one thing. That's why the diversity and the consistency is so important. You know, I had crashing credit work for one investor in Ohio. I have probates working here in Massachusetts. I had, pre-foreclosure in California. You know, the bottom line is the more diverse you are, and the more you focus on the quality money-making campaigns in your business, that is when you will truly, truly be able to make profit on the back end as well. All right. So the key is this: keep learning, testing, tracking, creating, and recreating. And the only way to do that is with the metrics and the KPIs. Because why? What are you truly trying to do? Repeatable systems that work and are profitable. Let's go back to this. You want to focus on quality money-making campaigns. Let's put it in here. A repeatable quality system that you're making decisions based on the numbers that work and is profitable. The only reason you build this is if you're tracking the numbers. A repeatable system is a system that is a quality system that you have tested, tracked, created, that is working and is making you money. And the only way you know that is by tracking it. All right, so here are ways to track your marketing: spreadsheets, databases, and your bookkeeper. Okay, what we're going to really zone into is the spreadsheet element of it. Okay, yes, there are amazing databases you can use to track your marketing. I personally like spreadsheets and working with my bookkeeper hand in hand. In my CMO circle, we actually did a full marketing accounting month of setting up your marketing chart of accounts, putting your whole budget together, you know, your prospective budget and your actual budget, and just advanced metrics as well. So you know, what we're going to learn here today is just simply the marketing lead tracker. Okay. Just so you can start. Once you start and you're ready for the next level, you can give me a call and I'll set you up with the advanced level. But I need you to get set up the right way in tracking these 4 core numbers we're going to be talking about shortly. All right. So again, just to recap, know your numbers. When it comes down to kind of like your response rate and when you get your marketing out the door, you know, the normal range is 1 to 3. The standard range is 1 to 3% is a good response rate. If you're getting anything between 1 and 3%, you know, look at it, track it, see what's working, see the conversion from this. 1 to 3% response rate means what you're putting out there is working. Okay, so you need to take a look at it and make it very quality so it continues to work for you. And again, just a friendly reminder, 1 in 50 leads should be a deal when you're beginning. Okay, some people do 1 in 60, 1 in 70, but the average is 1 in every 50 leads that come through your desk should end up becoming a deal. Okay, if you're scaling or experienced, 1 in every 30 leads should end up becoming a deal for you. Okay, so the more you get your phone to ring, the more appointments you go to, the more experienced you get, the more you become good at converting leads, which we'll get into in module 6. That's actually one of my favorite trainings to do, how to convert these leads into deals. All right, so what are we going to focus on today? Today, what we're really focusing on, I don't want to overcomplicate this, is 4 core marketing metrics. When I say these 4 core marketing metrics terminology, number 1, you should know exactly what I'm asking. And 2, you should know the formula for it. It's just 4. It's not, you know, advanced metrics accounting, you know, AP, metrics. It's simple numbers that you can easily put in a spreadsheet or do in your head if you're really good at it. I'm half and half there. All right. So the 4 core metrics are your response rate, your conversion rate, your cost per lead, and your return on investment. Okay. So the metric number 1 is your response rate. So when I say, what is your response rate? What I'm really asking you is, how many leads came into your office? Okay. So if I said, hey, what is your response rate in November from your absentee list? What I'm asking you is, when you got your campaign out the door, how many calls came in? Okay. Your response rate is simply the percentage of customers who responded to your marketing campaign. Okay. That's it. So what is the formula? It's your responses divided by your pieces sent equals your response rate. And again, I have a spreadsheet I'll show you in a minute. It has everything already logged in, but it's simply, if you sent out 500 letters and you got 10 responses, okay, it's 10 responses divided by the 500 letters you sent out equals a 2% response rate. Is that a good response rate? Yes. So it's simply how many people called you from the campaign that you sent, how many letters were in that campaign or whatever it was, and it equals 0.02 equals your response rate. Okay. So very easy. And again, I will include these slides. Oh, actually in your Kajabi backend, in the body of that lesson, I'll have these formulas for you as well, and the examples, so you always have as a reference. All right, so that's your response rate. What is the percentage of customers who responded to your marketing campaign? If you don't want to know, if you don't know the percentage, you can say, hey, I got 10 responses off that absentee campaign. Okay. All right. Metric number 2, conversion rate. So the response rate is how many leads responded to your campaign. Your conversion rate is simply how many leads did you convert into deals? So under contract, ready to close. The conversion rate is a percentage of prospects who took action on your marketing, that you converted, leads you got under contract, leads that got converted into deals. Okay. So let's look at this. So the formula is the number of responses. So let's take that 10 let's just say you got 100 leads, responses, okay, in November, and you converted 10 of those leads into deals. That equals a 10% conversion rate. Again, my spreadsheet has all these formulas already in there. You just have to punch in the numbers, which I'll show you. So you have your response rate. How many calls did you get? Your conversion rate. How many leads did you convert into actual deals? Okay. So again, not super complicated, but you do need to understand that when high-level people are talking, these are the things, this is the terminology that we use. If you want to be the part of your marketing department, you need to understand what a response and a conversion rate is at the bare minimum. How many responses did you get? What's your response rate? How many did you convert? What was your conversion rate? Again, how many calls did you get in? How many leads came in your office? And how many leads did you convert into deals? Okay. That's how you should look at those two things. Metric number 3. Again, this is more advanced. I have this in my advanced training, but I'm going to put it up here for now. Okay. So cost per lead is simply how much did it cost to obtain a new customer? This is one of the most critical marketing metrics to understand. Okay. So let's look at this. It's your campaign cost divided by the number of leads equals your CPL, your cost per lead. So if you spent $500, let's just say on the absentee campaign, and you got 10 leads, what's your cost per lead? It's $50. Okay. This is the formula for it. So it's costing you $50 per lead to get a lead to call your office. Okay. This is something that I work hand in hand with my bookkeeper. Okay. Some people like to, detail all the budget themselves, but I work with my bookkeeper where we have a very detailed profit loss statement that I look at a weekly basis, and I can track exactly what my costs are that I can just put right into my spreadsheet. Okay. I highly recommend for very short money that if you if you're starting to up your marketing, that you hire a good bookkeeper, set up a good chart of accounts where you can track your marketing, and it's something that you can hire an MVP, which is your bookkeeper, to do this part of your business. You can work hand in hand to track your marketing costs versus you being the bookkeeper, the technician, and spending all of your time trying to track all of your expenses. Everything's pretty much online anyways that can be easily tracked by your bookkeeper for very short money. It also shouldn't what's the word? It also shouldn't take your bookkeeper very long per week to do this for you. It shouldn't take over 1 to 3 hours, 3 hours max to track your marketing budget. Okay. So that's the cost per lead. Your campaign cost divided by the number of leads equals your CPL. Then finally, your most important number, which is your ROI, your return on investment. Okay. What was the percentage of, what was your ROI percentage based on everything we just spoke about? So the ROI is the most valuable marketing metric to utilize because it allows business owners and marketers to measure the success of a campaign quickly and easily. Okay. So when you look at the domino effect that I always talk about, you have your marketing, acquisitions, your finance, let's just say you're rehabbing the property and then you sell it, right? At the end of selling is your profit. What was your return on that investment, right? So that's your revenue. Your profit is your revenue minus your campaign cost divided by your campaign cost. So let's just say you made a $10,000 wholesale fee off your absentee campaign. So it's your $10,000 revenue profit that you made minus the $500 that you spent on that campaign divided by the $500 you spent on that campaign. And this equals a 19-time return on investment, or $19 earned for every $1 spent. Is that a good return? Absolutely. So basically you made a 19x return on investment, which is great, absolutely. A lot of people like to see 10x on their return. Okay. At least $10 earned for every $1 spent. Okay. That's a great minimum for profit, your ROI.